Good afternoon, everybody, and thank you for joining me on this Fireside Chat, where my guest today is Rossmann, the Managing Director of STR. After several chats that involved the hotel leaders, we thought today we will talk a little bit about the recovery side of things, because we know what the challenges are, and we are all looking forward to recovery of business in some form or the other, and hopefully a really good recovery. Now, Robin is, I realized today, a fellow chartered accountant. That makes two of us on screen today. He's a chartered accountant from South Africa.
All the best people.
He has sort of been with STR since 2016, leading all parts of the globe except, I think, North America. And he's also previously been with Deloitte in various advisory roles, largely related to the hotel industry, but maybe others as well. So Robin, thank you for joining us. Before we start, of course, I'll have to do the housekeeping piece. If I can please have the slide on the housekeeping. Yeah, so as is the norm, everybody is muted so that we can have a easy, smooth conversation. We love your questions. Please do post your questions at the places indicated. We have received some questions already, and we'll try and weave them into the conversation. Whatever questions you give will be passed on to me by my team via WhatsApp. So if I am looking at the phone, it's only to look at your questions. And don't bother raising your hand, although that option is available technically on this platform, because I won't be monitoring that. So with that, Robin, let's get started. And you know, I don't want to talk too much about current data and current performance. We know that March quarter was relatively good in the sense of, you know, occupancy all India was just shy of 50%. ADR for all India was over 4,200. Not great in the past context, but not bad in the last year context as well. I don't want to get too much into data for April and May, because we know it's not good. Why talk about something that's not in great shape? So we will touch upon it at some point. But you know, let's draw lessons. There was a recovery pattern in India out of the first wave. And how did that compare with other countries and regions? I think that's going to be important to get us to get a sense of what the recovery pattern might be going forward. Robin, over to you.
Thank you, Vijay, and thank you for inviting me along to join this session today. And you know, before I talk about or show any slides or data, I mean, the one thing I would say is, obviously for you and for everybody on the line, I really do hope you're all safe and well, and your families are safe and well. I've been closely following everything that's been happening in India for the last month and a half, and really praying for all of you and for India, because it is, you know, I think it's not a great situation, and I really just hope we're all able to get through it and as soon as possible and as safely as possible. So I thought I'd just say that first, because for me it's the most important thing.
Yeah, Robin, maybe it's me at my age, but I think you might need to speak up a little louder.
All right. How about that?
Thank you. Yeah.
There you go. All right. Excellent. So yes, clearly it's been a tough month or two for India as a whole, for far more important matters, but it certainly does impact the industry that we're all working in. And I think it must, and the case is true for Europe too. It's pretty dark times, and sometimes it's difficult to feel optimistic about how the recovery will play out. But I do believe it will play out faster than many people expect. And maybe if I start just by sharing some slides showing the recovery profile in other areas, and we can draw some parallels from that. So let me show my screen. I've got a few slides to start with. Is that, can you see that, Vijay?
Yeah, we can see that.
Wonderful.
Yes.
Wonderful, wonderful, wonderful. So I thought I'd start just looking at occupancy, because rate, total revenue, profitability, all very important, but it all does start with getting bums in beds. And this shows you occupancy indexed to 2019 levels, all the way back to from the beginning of the pandemic, January, February 2020 to where we are now in May 21. And what you can see with India, which is the purple line there, is obviously much like Europe, it dropped to pretty low levels, April, May, June last year, but it was showing a very robust recovery all the way up until March, April this year. You can see really way ahead of Europe, which enjoyed a brief recovery over the summer months and then has been back down at the bottom, running at about 20% of normal occupancy levels, really underpinned by government restrictions on travel and obviously second and third waves in the UK and second waves across Europe. And India are recovering far ahead of that, up to almost 2/3 of normal occupancy levels until things had to be closed down, and obviously the resurgence of cases in April and May. Interestingly, comparing that to two other regions in the world, you can see here that India had surpassed the Middle East in terms of recovery, or at least matched it, and the Middle East being one of the strongest recovering areas in the world. And its profile was actually pretty much mirroring, if not a month behind, the recovery profile that we've been seeing in the US, where occupancies have got back up to around about 80% of normal levels. And I think that's still not great, but actually a lot more robust than many people might expect. And I think India was getting there because, much like the US, obviously a lot of the demand comes from internal domestic demand, and there's less reliance on that international travel. And we can talk about that in a bit more detail in a moment, but I think what's clear to me from this is, the demand is there, the demand was recovering, and India, much like the rest of the world, you will see a strong recovery as soon as people are able to travel. It's restrictions and COVID cases that are stopping that recovery, not people's desire to travel. So just talking a bit more about India,
If I might interrupt you there, going back to that slide, I mean, it's very interesting because the large perception and probably the reality is that we saw a lot of recovery on the leisure sector, and we can talk about that at the right time. And we did not see that much of recovery in the business travel demand at the big cities and the big hotels. They were challenged because of lack of business travel. And to yet see this kind of recovery is something that is very heartening, almost sort of happily surprising. But I think that's a point that it's important to make at this stage, that it's not just the leisure travel that's come back. Maybe it's business travel or other travel in the second tier markets, a little bit of weddings demand, but certainly the lack of business travel in the big cities does not seem to have sort of slowed down the recovery process in a huge way. It has certainly, but not the kind of impact is not as severe as one would imagine it to be.
Yeah, I think it's amazing to see how much demand is out there, even without that international travel and that business fully coming back. When you look at India by itself, and just one other thing to add actually to this is, one of the questions might be, well, but there are a whole bunch of hotels that are closed. How you can't really compare because all these closed hotels, and the data that we're showing here adds back all of the closed hotels and assumes they have 0% occupancy, right? So it is giving a true reflection of like for like demand occupancy, assuming all those closed hotels were open and diluting the occupancy of the open hotels. So it's not painting an overly rosy picture, if you will.
Okay.
But looking at India and really digging into that leisure versus business. You know, one way you can look at it is how much of the demand is coming through on the weekends versus midweek. And so I've actually split it up here between Sunday, Friday to Saturday, and then Monday to Thursday, because you know, if you think about weekday, weekend splits, I think famously I've heard it said that, you know, the week is made up of weekday, which is Monday to Thursday, weekend, which is Friday to Saturday, and Sunday is typically the worst day and doesn't really fall into either. So interestingly, when you do that, unsurprisingly, Fridays and Saturdays are performing much better than midweek days, the Mondays to Thursdays, but there was still recovery in that Monday to Thursday. It wasn't like it was sitting down and all the recovery was only coming from weekend days. And what you also see actually is Sunday not doing too badly, it actually aligning pretty well with that Friday to Saturday. So looking at India as a whole, this isn't just about weekend recovery that was coming through. It was midweek that recovery that was driving it too. Now, clearly, you do get leisure demand going into midweek when people take a week off. And when we look at the major cities around India, you can see that those leisure-led markets, particularly Udaipur, Goa, showing much stronger recovery. You know, Udaipur almost back to 2019 levels in March, April, and Goa running at 80% of 2019 levels, whereas looking at Mumbai and the orange there running at, you know, 40%, or sort of 40% lower, so 60% of 2019 levels. So there definitely is undoubtedly those markets that have more leisure appeal. And I can say personally myself, having been to Udaipur a few years ago, it definitely has a lot of leisure appeal. That those are the markets that have done better, and those are the markets that will again see the strongest recovery as we come out of this downturn with the second wave in India. You can expect those to recover again more strongly. So, but I know Vijay, looking at this data, what is there anything you would add to, you know, what this is telling us in terms of the story of the recovery in India?
I think if you look at this, I mean, it was obvious that Udaipur and Goa were doing much better. Udaipur, in fact, when we looked at the calendar year 2020 and the second half or the operating part of it outside the COVID, Udaipur had some astonishing ADR levels as well. I think the one market that's Bangalore. Is it possible to highlight Bangalore out of all these colors?
Yeah, we'll do this. There we go. Sort of right towards the bottom, really.
Yeah, that's the one market that is a big market. It's got the largest inventory among cities in India, 14,000 plus rooms in the chain affiliated segment, and that is a market that's still struggling quite a bit in terms of recovery. It did cross the 40% towards the Q1 of 2021 and some, you know, the later part of maybe 2020, but Bangalore is struggling. Mumbai has done reasonably stable, should be higher, but then if I look at it up to August, actually Mumbai was the highest, and then it was number 2 till almost November. So that's interesting for Mumbai, but Bangalore is the one that is a concern.
Yeah. I mean, I think the last thing, sort of before I stop sharing slides for a bit, is I think it's important to point out that even in these more business and international led markets, there was recovery coming through in March and April, and the trajectory was definitely up. And yes, business demand wasn't back fully, but it was coming back. And I think that we will see recover when cases come under control, when vaccinations get up and travel can reopen again. I think it definitely feels different this time in Europe. You know, coming out of the first wave of cases through the summer months where leisure travel began, business travel didn't really begin, and it was about to start beginning in Q3, Q4, but it never really got going. And I personally never really took any business trips. However, this time around, with there being more certainty because of higher vaccinations, business travel is absolutely starting again, much more than it did in Q3, Q4 this time now. And even though we're still, really only in May, I had my first business trip in 14, 15 months last week, and it definitely felt very good. So I think you'll find there's a lot of people out there itching to get out on the road, meet contacts that they haven't met for a long time, and even for internal purposes, reconnecting with people face to face is vitally important.
Yeah, I think the fact that people do want to travel for business is a valuable input. Unfortunately, in India, the vaccination program is not going to sort of get too far ahead for at least a few months now yet. So that may mean that the robustness of business travel recovery may not be as much as you might see in Europe, etc. But then, even without the vaccinations, the point is, we looked at Q1 of 2021 and business travel starting to recover. Now, all of that was pretty much without any vaccine, because other than the healthcare sector, the vaccines were only starting to be available in March of this year for all other segments, the 60 plus segments. So if business travel was happening without the vaccines, I think we can only hope that once the vaccination programs get underway, post the monsoons, we should have more robust recovery. We will still have some recovery certainly during the monsoon period as well, because the Indians will travel with one vaccine shot, or sometimes with none. Yeah. So yeah, that's interesting. But shall we move on to another subject?
Well, so I thought
else you'd like to add?
I think maybe before we do, you did ask sort of some lessons learned from what we've seen so far in the recovery out of the second and third wave in Europe, and what we learned from coming out of the recovery in India. And I guess I'd summarize it in the same way that all horror movie plots play out, and what's important to survive in a horror movie, right? And that is, number one, never go to sleep, right? If you're in a horror movie, never go to sleep. And for hotels, that equates to never close. What we saw consistently across the world is hotels which closed have struggled to regain the market share that they competitors gained whilst they remained open. And it didn't just matter for 1 or 2 months after things reopened. We've seen hotels across Europe continue to outperform the ones that remained open, continue to outperform the ones that closed by 10, 15 percentage points for 5, 6, 7 months afterwards, because they've gained a loyalty of a tranche of guests, and you don't lose that. And it's also about continuity in the staff. The second thing we've seen is don't panic. So right, also, if you want to survive in a horror movie, don't panic. And when hoteliers panic, they tend to drop rates, right? To think that that's going to solve everything. And what we've seen across every market is that, and I've got a slide later I can share, is that there is no correlation between change in occupancy and change in rate in the last 12 months. The degree to which hotels outperform have been driven by other factors, right? So that's the second one. Third one, and really important, is you have to be ready to run and react really fast, just like in a horror movie. And to give you an idea, in Israel, from markets that were running at a 5% occupancy have gone up to 50-60% occupancy within 2-3 weeks of vaccinations reaching a critical point. Even in the UK, and we're only just reopening now, we're sort of into the first week of full reopening, we've seen occupancies going from about 20% to what will be about 50% in the space of 2 to 3 weeks. So it really is, there is so much pent-up demand that it is it's an on-off switch, and don't assume it's going to take forever to build up. You've got to be ready to react fast. And then the last thing I'd say is, in horror movies, the bad guy always gets caught in the end. You always prevail. There's always a happy ending, and what we've seen in China, and I didn't even show a slide on China. What we're seeing in the US, what we're seeing in Europe is this isn't the death knell of travel and the hospitality industry. It will recover. It is recovering. China's already back at 2019 levels of occupancy. Yeah, more on that in a bit. But I thought I'd just summarize that quickly before we move on to some other topics, Vijay.
No, I think those are very important points. Unfortunately, in India, we've already, we tend to be very easy with our rate drops, very ready with our rate drops, and that has happened to a point where, notwithstanding the price inelasticity of demand at times like this, that rates have dropped unnecessarily or unusually, whichever. But I think it's important to, the point you make about the speed of recovery. And yes, if you're closed, then you can't open up and get cranked up so quickly. Do you have a sense, based on the data that you've been getting, of how many hotels remain closed even now? Or how many hotels remain closed during the first quarter? I mean, forget April, May, but let's say Q1 21. Either hotels or numbers of rooms or whatever, parameter you can give us.
Yeah, I mean, I think the big difference between the second wave and the first waves is in the first wave we saw, depending on where you were in the world, about 8 in every 10 hotels close, so 80% closed. Whereas in the second wave, we've only seen about 20% of hotels close. So far more have remained open because I think a lot have realized the importance of staying open to retain whatever business is out there. But also, I think many hotels have got better at running on a lower cost base. You can run a hotel with far lower costs than normal if you plan it right. So I think, yeah, that's a broad rule of thumb. Is it's much
that less. Data that data is a global data. It's not just India data. Just to clarify.
That's global, but it's also true for India. So
fair enough. Okay. Any other specific learnings that we could get from, let's say, a wave 2 or a wave 3 as against a wave 1? Certainly in India and I'd say probably in France and some other countries as well, the wave 2 was more severe than the wave 1. At least in India, it certainly has been. So any other learnings that we might get from the wave 2 or 3 as against what happened with wave 1? Or have you been able to capture most of the recovery aspect in that sense?
I think I've captured most of it. I'd say the one thing that's different this time is coming out of wave 1, there was pent-up demand. In the same way that if you take a bottle of champagne out of the fridge and you leave it to get warm for half an hour, when you open it, it comes out faster than you expect. But the second wave, third wave, there's way more pent-up demand that's out there. In the same way that if you take a bottle of champagne out the fridge and leave it in the sun for a day, when you undo that protective wire, the cork just blows out and there's champagne going everywhere, because there's far more people that are, number one, more comfortable with the risks of traveling, especially if they're vaccinated, and number two, tired of being cooped up in their house for 15 months. And certainly in Europe, the reality is many people have actually saved a lot of money in that time, and they're happy to spend it. So I think whatever pent-up demand we saw coming out of the first wave is a multiple of 2 of that coming out the second and third. And I think the big unknown, though, is international travel. But even
I was just going to come to that. That we still don't have the data for international travel because it's not there. But is there any feedback you're getting, any sense you're getting as to how international travel would rebound? And I guess the short haul, the medium haul is one, the long haul is another, and for India, the long haul becomes pretty important. The medium haul is important as well, but the long haul for the leisure sector is very important. Is there any sense you're getting for that?
So when it comes to international travel, you've got to split it up between leisure, business, and then group business, right? And the order of the recovery will be in that order. And what we saw, if you look at markets like Dubai, and if you look at markets like the Maldives, in the December, January this year, before the second waves really hit, they were back up at the UAE and Dubai was back up at 2019 levels of occupancy and rate in that period. There was a massive, and luxury hotels there were charging 10, 20, 30% more than they usually would have done, or than the prior year. So international leisure demand will come back quite quickly. Business demand obviously will take a bit longer, and I think there is the one reality we have to face is capacity has been taken out of international air travel, and that doesn't come back quickly. And furthermore, costs have gone up, so the cost price of flying has gone up together with any kind of tests. So, for the rest of 21 and 22, I don't think we'll see it coming back anywhere to the levels it was before. We are expecting business travel to really only get back to 2019 levels 3-4 years from now. So that will be one of the longest recovery periods.
Yeah, I think for India it might be a little bit different. This is my view. I could be wrong, but a lot of the inbound leisure is long haul. Now, what you've seen in Dubai and what you've seen in the Maldives is true, but then also we need to recognize that there were just a handful of markets that were open. So there was a big, concentration of demand going into a limited market, and therefore there was a higher sort of occupancy level there. When multiple markets open up, then whether people will have the willingness to have that kind of long haul leisure travel very, very early, I'm not so sure. On the other hand, a market like India, where there is a lot of business that needs to get done, we might see some recovery, but certainly whether it's 2 to 3 years versus 3 to 4 years is a question, but it's not going to be 12 months. That's certainly something that is very clear from the Indian business travel point of view. Not even 12 to 18 months. It's probably going to be 24 months plus. There will be some recovery, but not to the levels. Okay, we talked occupancy a lot. That gets people into your hotel. How much are they paying you? What's the room rate, the ADR trends of recovery?
Yeah, and obviously that's been one of the biggest concerns around how long will this recovery take, is if you have an extended period where demand isn't there, it does put a lot of pressure on rates, and we all know how difficult it is to recover rates once you've lost it. So let me share some slides on this. Can you see that again, Vijay?
Yes, we can. Yes.
Great. So looking at the same regions we looked at for occupancy, you can see India straight away at the bottom. Really, although it had some recovery from an occupancy perspective, it wasn't really from an average room rate perspective. And rates on average are sitting 40% below what they would usually be across the country as a whole. Now, does that mean individual hotels have 40% lower rates? It absolutely doesn't mean that. A lot of this is down to mix and about some of the hotels that are having the biggest challenges being those, large luxury and business orientated, high rated hotels in the big cities where demand hasn't come back. And so there's sort of a mix pulling down the average for India overall. But nonetheless, I think it is fair to say that rates really haven't recovered much from the lows. I think the positive news is it's been amazing to see how quickly rates have recovered in markets where demand has come back. So, even in Europe, which saw limited occupancy recovery, we saw rates get back to only 20% below normal levels. In India, in the Middle East, we've seen rates up to December get back to 2019 levels, and It's dipped away a bit, but it, you know, has come back again strongly. And then in the US, we're seeing steady recovery there too. So you know, it's been more resilient than I had expected. When demand has come back, rates have recovered faster than I expected, and particularly, obviously, with anything with domestic leisure, actually many of those enjoying rate growth over previous highs. So looking at India, looking at some of the same analysis we did previously, really no difference in rate index between Monday to Thursday, Friday and Saturday, all similar at that sort of 40% below. And looking at the individual markets, you can see similar story. Goa, Udaipur, you know, doing much better. Rates almost back at 2019 levels compared to some of the markets more reliant on business and international. Mumbai is sitting there at 50% of 2019 levels. So it really does depend on the market. And I'd actually add to that that it's more than just depending on the market. It does depend on the individual hotels within a market. We've done analysis in different markets around the world, and we've never seen such a wide range in performance between the bottom performing and top performing hotels. It used to be that within an individual class of hotels, you know, the top performing hotels would be achieving occupancies that were 10, 15 percentage points more than the worst, like at most 10 percentage points more than the worst, so a pretty narrow range. That range is now 70 to 80%, right? So if you thought benchmarking was important before, or maybe if you didn't think benchmarking was important before, it's even more important now, because understanding that you can't just assume that your performance of your hotels is the same as the rest of the market or your competitors. It is likely to be drastically different, and it's important to have that scorecard of how you are doing so you can adjust your strategy. And to kind of illustrate that, you know, here's Mumbai, and this illustrates 2 points, right? This is showing individual hotels, and you can't see which hotels they are, but you can see the class, luxury in teal, upscale and midscale in purple, and midscale and economy in blue. And you'll look at this chart and go, well, it doesn't really tell me anything. There's just dots everywhere. There's no correlation. And that's correct. The dots are everywhere. And this shows you rolling 12-month change in occupancy and rate. And it illustrates 2 points. One is the range in performance, the difference between, you know, this luxury hotel here that had 40% decline in rate and 60% decline in occupancy is, sorry, I got that wrong. Right? Yeah, no, I got that right. Versus this one over here that had 20% decline in rate and 10% decline in occupancy is huge, right? The range of performance in a market is huge. So really understanding where you sit is important. And then the second point this illustrates is that there is no correlation between the change in occupancy and change in rate, right? It's not those hotels that have had bigger rate declines have had smaller occupancy declines. If it did, this line would look very different, and the dots would be nicely in a row from there to there, but it is not the case. So yeah, I think those are the key points I'd sort of share as it relates to rates.
Would you go back one slide? Sorry.
Sure. There we go. Can you see that?
Go back slide. The previous one, please.
Yep.
I mean, this is just for clarity. This is the percentage of recovery or decline, whichever you want to call it, the percentage of recovery really versus the actual rates. So Mumbai is showing a lower recovery than some of the other cities because Mumbai was at a much higher rate than the other cities. But then the fact is that Mumbai has a larger share of luxury upper upscale supply than some of the other cities, and therefore the lack of recovery is a telling aspect of the lack of demand for the upper tier, top tier business hotels, no business travel, very little to do in terms of, I won't say very little, but sort of the leisure segment is certainly not sufficient, or the staycation segment is not sufficient to take care of that. and that's something which is hurting all the cities. So if we actually take the rates, the absolute numbers for the rates, then everybody's going to sort of pretty much bunch together in terms of the business cities, the big ones, and it's not going to look very pretty. And the fact is that we have not been able to recover rates, which, as I alluded to, India was ready to drop rates quickly. Even if you go back one more slide, when you compared it with some other markets, sorry, that one. I mean, you see that even when occupancies came back, rates did not come back because the leisure segment was, although it did very well, was not large enough to help the whole country's rates being pulled up, which is what helped someone like a Dubai maybe, or a Middle East maybe. And it's that lack of business travel which is leaving the rate recovery curve fairly sort of at a low level, forget, having no steep inclines.
Absolutely.
Okay. Yeah. All right. I think you gave the example of Mumbai, but if there's anything else that you'd like to bring up in terms of sort of sectoral differences in recovery patterns, I mean, do you want to talk anything further in terms of leisure versus business, or second tier versus big cities, or any of the other segments?
I mean, I think the data I showed there was obviously for the bigger cities. What's also true is sort of regional, smaller markets have had a stronger recovery than those bigger cities because of the less reliance on international and less reliance on business, and also in many cases easier to get to. Being able to safely get to places is also a key to getting demand there. So I think that's a general rule that's been true across the world and in India.
Okay, let's talk a little bit about cricket, if you don't mind.
Absolutely.
Yeah, you're South African. You'd love it. We had a lot of South Africans playing the IPL here, and the IPL was a great thing. On one side, was vilified badly on the other side. But I believe you've tracked the impact of the IPL related demand on hotels which had the IPL demand versus those which did not. And I'd like you to showcase that, because it shows not only just the IPL aspect, but it also shows the power of events to draw to sort of drive business in a city. So if you want to show us that, Robin.
Yeah. You seeing that now?
Yes, you are.
Excellent. So what we're showing here is it's very simple, really. It's looking at the Mumbai market as a whole, daily occupancies, which is in blue. Mumbai market, luxury and upper upscale. So the top end of the market in purple, and then we've identified through social media and otherwise the hotels that secured the IPL business from a quarantine perspective. And 7 or so hotels looking at the average there, and you can see the significant premium that was achieved by those hotels. And I think there's a couple things this highlights. It's yes, the importance of events and driving demand. I think it also highlights how much more important it is to have general managers and management teams that are really focused on going out there and getting every bit of business that they can. I often get asked, what drives those hotels that outperform at an RGI perspective? What are the things? And there are always lots of different factors, but the one consistent theme is it's those hotels that have general managers, revenue managers that are entrepreneurial, that go out there and really run it like their own business and look to try and fill up and find demand. And in the markets that we're in at the moment around the world, hotels don't fill up by themselves anymore. They don't. You need people that are focused on going out there and securing the business that they can. So.
Yeah, I think this you're right on the points you make about the drive to get business, but this also showcases how much events and sport. It's not just, we've been a lot focused on conferences, weddings, and those kind of business drivers into large format hotels. But sports events can be a big driver. You see Mumbai falling off once the gap falling off once the IPL shifted out of Mumbai. It also tells us how much we lost when the IPL was happening in Dubai, UAE last year. And I really hope that we can keep that World Cup, because if that World Cup comes to India with 12, 16 teams or something like that, that's going to be a big boost for us in the October-November period, which is a good period otherwise, but certainly in the big cities, it's going to be a big boost for us. So we need to try and get as much as we can with BCCI to get that.
It would certainly be a reason for me to come back to India, Vijay.
Yeah, we'll even create a bubble for you, an SDR bubble for you if you like.
Oh, so there you go. There you go. Although I do have my last World Cup experience was here in England, was very traumatic, because I went and watched the India-South Africa pool game in person in Southampton, and I don't recall many more humiliating a defeat as a South African supporter. So I might have to just overcome that post-traumatic stress to come over and watch.
We won't give you a South Africa-India match to watch.
I think that's wise.
Listen, is there anything else you'd like to talk segmentally, luxury segment? Because again, there's a lot of concern about what happens with the luxury segment, particularly with the rates not coming back. Do you see anything from the future point of view that would, I would say, support the luxury segment?
Oh yeah, I mean, I think luxury didn't help in 2020, but in 2021, 22, luxury will be the outperforming segment globally, and I expect it to be the case in India too. It was true coming out the 2008-9 recession, and it'll be even more true this time around. So I know luxury's had a hard time, but I wouldn't bet against it at all in the coming years.
Okay, that's great. I think that's good news. Let's talk of two different segments: health and wellness on one side, and MICE on the other side. And one is mass, the other is more exclusive. Any views, any trends that we are seeing on potential recovery? And I know MICE is probably too early to talk about, though I think you guys in the UK have had your first set of events somewhere in Birmingham, if I'm not mistaken, where it was an in-person event. But any views on how MICE might come back, and how sort of health and wellness is played out in this period?
Yeah, I think that's all. I mean, and the one thing we haven't talked about yet is all of this is reliant on obviously vaccinations being effective, and variants not creating a massive problem once people are vaccinated. But yeah, what we're seeing in the US and only just starting to see in the UK is that MICE business is coming back a lot faster than people expected. I had a bunch of colleagues in the US at the Hunter Hotel conference last week, and it was at normal levels of attendance. And people were, took off their masks if they were vaccinated, and had a cocktail party, and things were, proceeding as they used to. I don't think we're quite there yet in the UK, and I know in India it'll take a bit longer. But I'm very confident that business, will come back. Yes, there's going to be some headwinds from pressure on travel budgets and pressure on making greener choices. I think those two factors are going to come into play to delay full recovery. But it's not, that type of business has not gone away forever, for sure. And if anything, in a world where more people are working remotely, it creates more need for people to get together as teams, or with clients in person.
Let's look at the supply side of things. we track supply, you track supply differently in terms of the data that you get from the chains. What changes are you seeing to the supply pipeline in different parts of the world? In India, we're expecting a slowdown, projects being pushed back, even abandoned. What are you seeing in other parts of the world?
I mean, I think in the past when we looked at supply, we would look at rooms under construction. We'd look at rooms that were in planning or planning approved, and then we'd look at proposed, right? So we'd look at the whole spectrum. The reality of where we are now in this phase of the pandemic and recovery is, I think, it's pretty pointless to look at almost everything that's proposed or planning, because you can just assume that is delayed for some time still until there's more clarity on global recovery. And really the bit to focus on is under construction. And you're right, across the world generally, rooms under construction is down between 5 to 10%. Across Asia as a whole, it's down about 5%. Interestingly, in Europe, rooms under construction is actually up 25%, which may make you scratch your head. It certainly made me scratch my head. But that's really because of the strict lockdown measures meant that there were a lot of hotels where people put down tools for 3, 4, 6 months last year, and so we've had the combination of those delayed completions plus ones that started, and we've seen year on year rooms under construction is up, but long term. I think yes. Once those are through, you'll have a slowdown in new projects until we have, a stronger certainty on recovery.
Yeah. The new starts are not happening. I think that's what you're saying as well. That those which have been committed, funded, or which are sort of off the ground in some limited or advanced stage are continuing to close to completion, but absolute new starts are going to be slower to come by. In India, we are seeing even the challenges with financing that, because equity is hard to come back, debt finance even more so. So I think we're going to see the supply side slow down 23, 24, 25, 26. And as the recovery happens of demand, it might therefore help in sort of much better numbers, because there's an up on one and a down on the other, or a flat on the other. Yeah. Let's talk about STR. You guys did a deal with CoStar. I think STR was sort of, if I'm correct, sort of bought out by CoStar.
Yeah, acquired by CoStar. They recognized the gem and added it to the group.
Yeah, Randy was earlier in his career, he was part of the Horwath system at some point, so that's good. But tell me, what is the evolution of STR going forward, or your products going forward? Do you any changes in what you're going to be doing?
It's two things. It's sort of two buckets. One is CoStar. Many of you probably won't know what CoStar is, but they're global real estate information platform. They are the world's leading provider of real estate information. So everything that we track at STR for hospitality and hotel assets, they track for the rest of commercial real estate. So retail, office, logistics buildings, all real estate. And they track who owns it, performance data, transactions. So the reason it made sense for us to become part of CoStar is the one thing they didn't have was hospitality, which is a $6 trillion asset class across the world, and it kind of makes sense to have that as part of one platform. So the first bucket of what we're doing and have started doing already is we're now, all our hospitality data is part of the CoStar platform, so that if you're going in there, you can see commercial real estate and you can see hospitality, and many investors obviously look across both asset classes. So that's the first bucket, and then the second bucket is, we're really passionate about, from a hotel perspective, giving, whether you're a hotel owner or an operator, investor, lender, the best information to make strategic decisions or operational decisions. And so we're always looking to add and enhance the data that we have. And the two main areas we're focused on are forward data, so business on the books into the future. We've got that launched around the world and are growing that in India. And then profitability data, so monthly P&L benchmarking. And those are the two areas where, if you work with us, keep an eye out, because those are coming to you and will give you great insights, especially when added to the daily rooms revenue data.
I think that expanded scope is something that's going to be valuable whenever you're bringing it into India, but certainly for international consulting and transactions as well. But I have a reverse question for you. A question that's come across which says that, listen, there's not much of corporate business happening just now. So for corporate hotels at the current time, what is the value of STR? STR, the STR data means nothing to us. So how would you interpret that in terms of still providing valuable data, benchmarks to even those corporate hotels?
So I would draw on my experience at Deloitte for this, right? Because when I was at Deloitte, we used to go around, and between 2009 and 2011, all I did was advise on debt restructuring, acquisitions out of administration, all the distress that came out of the hotel industry. And the first thing we would do was go in and ask for their analysis on their benchmarking and reporting. And there were two types of management teams. There were ones that were on top of it, and whether or not they underperformed or overperformed was broadly irrelevant. What mattered was they understood their performance versus the competitors in the market, and they could explain how they were adjusting their strategy accordingly. Those management teams went with the business and were successful, and it went well. Then there were other management teams that did not, and those were the management teams that did not stay with the business. Those were where somebody else came and took over, because lenders, owners didn't have the confidence that the people running the hotels knew what they were doing. And I can understand the question, because it does, it's tough out there, and there are lots of factors that aren't in hotels' control around why they're performing better or worse than the market or their competitors. But if you're not analyzing it, and if you don't understand it, then how are you doing your job properly? Because
the power of that. Go ahead, please. Go ahead.
Yeah, because even if there is limited demand, what I showed earlier is there are hotels that are doing much better than others that are doing much worse. And understanding that and being able to articulate that and adjust your strategy is what it's all about.
Yeah, whether it's your rate strategy, whether it's organizing your city into creating some events or whatever that helps drive business into your city. And there is no doubt that data is going to be the power, and is going to be even more the power going forward. But look at it differently. The kind of data that you've got, and I hope I don't have a black tongue, but you should be a target of hackers. And sort of, how do you mind your data security issues? How do you give confidence in your data security issues?
Yeah, I mean, there are a lot of people that have come to me and said there's a lot of people that have tried to acquire us, actually. When CoStar acquired us, a lot of other people are interested, and we're very careful about who would acquire STR, because if it's to the wrong people that would use the data in the wrong way, well, ultimately that would destroy the business, because participants would lose confidence. And so it was very important who we became part of. And ensuring confidentiality, data integrity, and the security of the data is fundamental to what we do. And so we do everything you would expect us to do to prevent internal people being able to share the data, as well as external security checks. And what people may not know is even with normal operational business, if you're getting a trend report from us, our systems go and check to make sure that it's not similar to another trend report that you bought, so that you can isolate an individual hotel's performance. So you know, it's highest priority for us, and thank goodness we've never had any issues to date. But that is because we really do focus on that.
Excellent. And I would imagine that has to be one of the core elements of your data management, because the data that you have out there is extremely valuable. And when you have that kind of consolidated data in one place, you've got to be very careful. What about data integrity? People are reporting the data to you. It's like the honor bar system.
Yeah.
How do you ensure or sort of satisfy yourself that the data has integrity?
Yeah, it is a question that comes up often, especially from general managers and revenue managers that don't believe that their competitors could possibly be doing that well. And we do get lots of good questions on that. But really, sort of three ways. One is in the way that we collect the data. Especially over the last 4 years, we've moved pretty much exclusively to automatic interfaces. So removing the human element, the human error, or human other potential mistakes. So a lot of it is automated already, and getting those automations up and working correctly is the starting point. The second area is, even with automations and other ways that we get the data, we do error checks and validity checks to identify hotels that are not performing in line with the rest of the market, or not performing in line with prior year, and that creates flags which in some cases automatically reject the data until we're satisfied, or gives us a flag to follow up and validate the data. Linked with that too, we do have the third area is really the people using the data. And we do often get people that raise questions, and we take them very seriously and investigate them. And helpfully also, for many of our clients, they incentivize and bonus their management teams off of their RGI performance. And so they're making sure in their own internal systems that the data correlates with what they've submitted with what's coming back. So there is a sort of self-health check there. So we feel the main thing I'd say is we're doing everything we possibly can, and where people are concerned, we do follow up and investigate it.
I have a question from the from the participants. What about the two sort of home markets for you? I mean, where you come from, Cape Town, and where you live, London. How do you see those markets having performed or performing, recovering? Tell us a little bit about that.
Wow. Okay, that's a wide-ranging question. Very different markets. Cape Town, beautiful place. Top leisure destination in the world, if you ask me. But still very reliant on local demand. So I think Cape Town is one where it'll not attract much international recovery for some time, but will benefit from lots of South Africans choosing to travel to Cape Town because they can't travel internationally, and there's some fantastic product there. So Cape Town, I think, could do reasonably well, and probably better than London. London obviously is much more reliant on international demand, over 50-60%, and also very business demand led, with lots of high-end hotels, and much like Mumbai is struggling, rates 60% below what they would usually be an average room rate, and occupancies at 20, 25, 30%. But the good news is it is opening and recovering now, and I think the real unknown in London is how much demand you'll get from British people wanting to come and do a leisure break in London that they otherwise would not have done, because they would travel somewhere else. And a very good example of that is myself. So I'm doing a staycation to a London hotel in a couple of weeks' time that happens to be 5 miles from where I live. But I'm still looking forward to it because my kids won't be with me. So there you go.
Okay. Maybe you actually have an invitation to come and visit some palace hotels in Udaipur. So That's come across as well from somebody. So I'm not going to name the person, but it's come across for you as well. So given the fact that you've talked about it, we're happy to have you go and see those palaces. Listen, last question for you. Actually, two quick questions. What are your 2 or 3 mantras for success as a professional?
So I came up with mine when I was driving in my car in Cape Town, planning to do a speech for Toastmasters, and I still use it. And it's very simple. It's one word, Bruce, and it stands for balance, relativity, understanding, confidence, and excitement. And I could go for, I have my Toastmaster speech, I could go into that for about another half an hour, but it's very simple. You have to have balance in your life. It's a mix of faith, family, friends, fitness, and focus on work. And if you overdo any one of those, then you eventually will fall over. So balance is really important. Secondly, relativity. It's more about personal relativity, and it's understanding that the way you feel is always relative to where you are in your life now, and you tend to adjust. So understanding that, the way you feel is relative to how you felt yesterday or the last week, and it can change is important. Understanding is all about, I fundamentally believe everybody makes logical decisions in their own mind, or most people do, almost all do. Make their own logical decisions. So often when there's conflict and you don't agree with somebody, it means you haven't taken the time to understand where they're coming from and making their logical decision. And taking the time to do that gets you 90% of the way to resolving something or getting a successful outcome. Confidence, because if you don't believe in yourself, nobody else will. And excitement is, well, we've only got one life, or maybe more, but we've only got one life in this co, and you gotta just be excited about every opportunity that you can have in it.
Where you come from, Table Mountain can be as exciting as anything else. So I think you get some of that excitement from there. But I agree with you. I think you've got some fantastic points there that you've made as your mantra for success, Bruce. That's a good one. Okay, time to end up. But before that, a very quick stargazing, crystal ball gazing question from the floor. When do you think we will recover?
So I'm very optimistic. So you have to take it with a pinch of salt. Look, so STR is forecasting that most markets will recover to 2019 levels by 2024-25, and that sounds a long way away. When you really break down it and look at it, though, that's an annual number. And it's a trajectory that slows down. And when you look at it on a quarterly basis, by the time we get to Q4 2022, which is only like a year and a half away, we're forecasting performance in most places will be about 90% what it would usually be. So that's going to feel pretty normal and pretty good. And most hotels, even if they're, some might have some leverage problems, financial otherwise, but they'll be profitable, successful teams growing year on year. So I think by the time we get to Q4 next year, it's going to feel pretty good, and most will be back up at 90% plus of what they would usually be.
I think everybody, I won't even say most people, I'll say everybody will take 90%. The top up can come a little bit later, but 90% in Q4 2022, if that really happens, we will have to have a treat for that. And I will drink champagne with you. I don't drink otherwise, but I'll have a champagne with you.
Fantastic.
Okay.
Fantastic.
Thank you, Robin. Thank you for your time. I hope that was valuable and meaningful for all of you who participated. Thank you for your time. Everybody, please stay safe and well. A couple more weeks, hopefully, of this lockdown before we start opening up again. Do it sensibly. I'm sure all of you will. Stay safe, stay well. Thank you.
Thank you, Vijay, and thank you, everyone. And yeah, stay safe and stay well.
Bye.